So Trump's taco trade returns. If you watched our previous video, we broke down exactly what happened between Trump and China, and it seemed like what was a good relationship with the two. They had meetings scheduled to work out a couple other things. We got the TikTok deal. China came out with the rare earths restrictions, and Trump was not happy about it Friday. Went to True Social and made a post that absolutely crushed the market. Well, it's Monday, not even Tuesday, and we got the return of the taco trade. So again, on Sunday, Trump went to social media, his platform, True Social, and tweeted, quote, "Don't worry about China. It will be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I." Yeah, that's end quote. And then further on, Trump says, "The USA wants to help China, not hurt it," end quote. So again, we kind of get that taco trade. Trump always chickens out. He has this aggressive stance and kind of beats his chest. Some of the analysts were calling it gorilla dust on Friday, saying, he's beating his chest, he's making a lot of noise, he's hitting the ground, and all the dust is coming up, and there's really nothing more than that. There's no real threat there. He's always going to pull that Uno card out and reverse course on you. So the markets rallied today, and we're going to talk about that, and we're going to look at a couple things that we need to have in the back of our mind for the week ahead. So before we go into the markets, I did want to talk about crypto, because crypto was down this weekend. I want to say Bitcoin got down to 109-ish. We can look back past 5 days. Yeah, got down to about 109, just under 110. And then Ethereum really got beat up. Ethereum got down to 3,600, 3,661 past 5 days over the weekend, and it's had a significant bounce. So that's good to see. I know I personally bought a little bit of Bitcoin. I didn't catch it right at that low point, so I just put a little bit in. I haven't purchased any in about a month, so I was happy to get it in at a discounted price than what I purchased it last time. All right, let's move on to the scoreboards, and those are the indexes, the three major indexes that I asked you guys to open up Yahoo Finance app and make sure you're following these three indexes: the S&P 500, the NASDAQ, and the Dow. Those are the scoreboards. They kind of tell you how the overall market is moving in specific sectors or industries. So S&P 500 up $1.50 today, a nice return. NASDAQ up over 2% today. Tech stocks did well. Broadcom was one of those companies that really pushed it higher with the partnership announcement with OpenAI. And the Dow closed higher today, 1.29% higher today. All right, so those are the scoreboards, the three major indexes. All three are up. That typically means the market is up, which it was today. All right, let's go down to the All In Collective. If you're new, the All In Collective is the companies that we are invested in the most. And by most, we mean there's $10,000 or more than invested in these companies and shares. And then we also have options in these companies as well. We kind of rinse and repeat. We'll jump in at a discounted price, ride it up, take profits. It'll fall back down for whatever reason. The market doesn't always go back. And then we'll rinse and repeat, jump back in, ride it up, take profits. And then sometimes we find other companies to invest in, but these are pretty much going to be our bread and butter. This is our starting 8 lineup, okay? So it's Meta, NVIDIA, Apple, Vertiv Holdings, which is an industrial company that helps the AI infrastructure build out. They cool chips. Those NVIDIA chips or whatever chips are in those data centers, they keep them cool and running efficiently. Uber, Amazon, Netflix, and Robinhood. These are all companies that are pretty easy to understand. I know NVIDIA took a little bit of time to really understand in the scope of artificial intelligence, the importance of those chips and those importance of those data centers. But so these are the 8 companies that we're going to follow every single day. And then we also have a watch list, a couple other companies to keep track of as well. But we'll always focus our research and our attention to these 8 companies amongst a couple other companies that we dabble in. But there's a couple of companies I wanted to highlight today. As always, now is a great time to buy the S&P 500 index and the QQQ, which is the fund that tracks the NASDAQ. And it's more tech heavy than the S&P 500. I've said it before, the S&P 500 VOO ETF group of some of the best stocks in the company, and I keep money in that index and I kind of use that as my savings account. There are times where there are years when the market is going to be go down, but historically, on average, the S&P 500 yields about 7 to 9% each year. So I'm happy putting my money there. And then the QQQ, again, heavy tech. If you like tech stocks and you don't want to pick individual stocks, that should be a place for you to start. QQQ at 600 or below, it's right at 602. Great time for you to start adding position, or if you have some already, to add on. VOO, you can always add on to that. Dollar cost average, put a certain amount in each month and just add on it slowly. If you get adding 1 share each month, that's going to add up very quickly, and it's going to compound, that compound interest. That's what we love in the long-term investing. But Meta had a pretty good day today, bounced back. Nvidia up almost 3% today, nice bounce back today. Apple, up about 1%. Vertiv Holdings, again, they are reporting here in about 9 days. They're up just about 6%. Company should have on your radar. This company is facilitating these data center build outs, and it just seems like new partnerships, new data centers are popping up every week with these new partnerships. Uber, now this is a company that we're going to talk about here in a second. Uber was only up 0.73% today. On all these companies, it moved the least outside of Netflix, which was pretty much flat. Uber is a company I'm looking at. Amazon finished well. Robinhood finished well. Okay. I did want to go down to DraftKings. DraftKings bounced back pretty well. I've accumulated at this point about 150 to 200 shares of DraftKings. I'll probably hit 200 shares before earnings and probably hold steady at that. But DraftKings is just something I'm going to hold long term. I have option plays on it. I just believe this this downturn in the stock is overdone. I don't believe that these Polymarket and Kalshi, if that's the right name, I don't want to say the right name, these prediction markets that are offering and potentially taking business from the sports books, I think that's overdone. I saw this past week some of the numbers were down from the previous week. And so we'll see. Time will tell. But I think over the long term, these sports books, DraftKings, Flutter, will do just fine. More states will start to roll out sports betting. It would be nice to see like a Florida or a Texas, those states that have not, those are huge states, but don't have that regulated sports books, online betting yet. It would be nice to see those in the future, and that'll be a major catalyst for these stocks. But for right now, I think outcomes haven't been the best. A lot of the favorites are continuing to win, but still, I'll really like DraftKings where its current share price is. I believe they're undervalued and mispriced. All right, let's head back to Uber. I didn't decide to jump into the market today for multiple reasons, but I'm usually one who jumps in whenever there's any dip, but I kind of wanted to let it marinate today. It was kind of obvious after that post Sunday by Trump that the market was going to rebound at some point, or a little bit, just matter how much. We didn't get back all of our losses. We got a little bit back. But I'm interested to see what happens tomorrow. I like the action today, bouncing back today. But we'll really see what happens tomorrow. We continue to push further. Another thing to keep in mind, earnings season is here. A lot of financial companies are going to be posting tomorrow. So J.P. Morgan, Golden Sachs, Wells Fargo, Citibank, those companies are going to be reporting tomorrow. We talked about that ETF that we were jumping in that mirrors the finances, XLF. Potentially look at that if you can get shares overnight, because I think it's probably going to bounce tomorrow morning, because I think the finances, the bank stocks are probably going to have a nice report. Just keep that in mind. So that could be a catalyst to push things higher tomorrow. But Uber did not have a significant bounce back. Its low of Friday was $93.40. So we're really not that far off of that. I believe this is a $100 stock plus. And I'm more than likely going to either find a new options contract or add on to one of the existing option contracts we have tomorrow. They're not very expensive in terms of if you want to get into like a Meta or Netflix, something like that. Those are expensive, or even Nvidia. So I like Uber tomorrow. So look out for me to jump into an option contract tomorrow with Uber. If you want to get it real time, exactly what I'm buying, you're going to have to join the Patreon. You can join the free version and get a lot of these posts and a lot of the research information that I provide. But if you want to get real time when I'm jumping in my options contracts, when I'm buying or selling shares, you're going to have to purchase the paid membership. It is only $10 per month. I guarantee you'll get $10 of value each month out of the community. But that's it. Looking at Uber tomorrow. Nice bounce back today off of that taco trade. And we'll see you guys tomorrow.